Investors, I think, were fearful we were being pushed into the abyss of a depression. There's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets.
Yep.
And I think some things really got washed out, and that's what we're going to keep an eye on. I'm kind of in the camp that this is going to extend further. I think markets then have to depend on a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it?
Even looking at these revised tariff rates, to me, there's still the ceiling. Do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out because it is driven by instinct or how close to recession do we get.
So we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's a blunt instrument that we don't know where it strikes.
Tom Lee explores the recent market turbulence and its implications for the future of cryptocurrencies, particularly Bitcoin. He notes that while investors remain cautious due to fears of recession and fluctuating tariffs, the market is showing signs of resilience. Lee highlights the idea of washed-out markets, suggesting that although challenges remain, opportunities for recovery are emerging. With Bitcoin acting as a risk asset tied to broader market sentiment, its trajectory depends heavily on economic developments. Lee emphasizes that traditional financial metrics and policies often fail to capture the true economic reality, making Bitcoin an attractive alternative. He predicts that as major corporations and institutions integrate cryptocurrencies into their portfolios through innovations like spot ETFs, Bitcoin's value could surge. However, uncertainties around inflation, tariffs, and policy decisions continue to pose risks to the market, requiring investors to stay vigilant.
The Fed has made clear during the midst of this that the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out. The outcome was worse than expected because markets were bracing for, maybe some sort of simplified, but, nothing punitive. And then the rates that were announced and the reciprocal were far greater than many expected. So I think today, is not surprisingly a day where the market is now absorbing the shock. We had an opening gap down 3.5%. And from that gap, I mean, we're a little bit lower, but stocks have basically been at the same level. So in a way, I'm not sure I want to characterize it this way, but it's kind of been an orderly sell-off, even though it's been huge. And I think investors then have to sort of, over the next couple of days, process a few things, right? Because the first thing that we know is these much more elevated rates don't start for a week. And the White House has been pretty much silent, right? There was no press, there was no White House briefing today. So I think it's a clear signal to me that the White House wants all these other countries to be, and this is just my guess, but at maximum pain is when the White House actually then says, okay, let's make a deal. So the stock market, of course, has to sort of process this over the next week or so. And Goldman Sachs put this together. The effective rate of the tariffs is 12.6%. And for all the countries and on $3.2 trillion of imports. Now, while that number sounds huge, it is basically in line with what many thought was the worst case scenario, which is around 15%.
The second thing I think people should keep in mind is that uh, it's really only 6 or 7 countries that really matter. I mean, there were like 100 countries named, and I know people are probably up in arms because there's all these like random countries that suddenly seem to have like penalty rates for their products. But at the end of the day, more than 70% of U.S. imports just come from six places: the EU, Mexico, China, Canada, Japan, and South Korea, Vietnam. In fact, maybe the best way to put it is like there's Mexico, Canada, then there's the EU, and then there's China, and then there's a block of countries, which is Japan, South Korea, Vietnam. Looking at those countries, I think the U.S. is going to do something with Canada and Mexico. I mean, they're exempted from these penalty tariffs anyway, so that it's whatever's going to happen with the USMCA. And with Japan, South Korea, Vietnam, they're essentially allies of the U.S. I don't think that they want to foment a new trade war. But of course, Japan, Korea, and China, we're talking about a tech supply chain, so I think that's going out the window.
Tom Lee delves into the challenges and opportunities within the current market landscape, emphasizing the volatility driven by recession fears, rising tariffs, and policy uncertainties. Despite this, he identifies potential for recovery, especially in washout markets that have faced significant corrections. Lee explains that Bitcoin, often behaving like a traditional risk asset, is closely tied to market sentiment. Its performance hinges on broader economic developments, making the path ahead both challenging and full of opportunity. Highlighting the growing institutional interest in Bitcoin, Lee points to innovations like spot ETFs as transformative for the financial landscape. He underscores the potential for cryptocurrencies to outpace traditional metrics often shaped by policy narratives, presenting Bitcoin as a hedge against economic manipulation. However, he cautions that navigating this evolving market requires a keen understanding of policy shifts and global dynamics.
What about the Trump put? Is it back?
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct, so there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah. I'd say, and that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for Main Street.
But I think it's not going to be a problem to sort of come to some agreement there. And those countries can either choose to negotiate or retaliate or do nothing. And of course, I would expect them not to retaliate, but to either negotiate or do nothing. And of course, I'm sure they're going to negotiate. So really, the two regions that are going to be at the center of this is just the EU and China. I mean, I would say that's the only thing that anyone should really be watching. And the EU, I think, at the moment is beating its chest and saying that they're going to be taking retaliatory actions if the US doesn't negotiate. And that's what I think is going to be dominating headlines until April 9th. And similarly, China, of course, is going to seek to do the same. But China and the U.S. have other things to negotiate as well. So China's hand isn't that weak because, one, China, number one, is a huge supplier to the U.S. Two, China, there are a couple of deals that kind of matter at the moment. One is TikTok and one is the canals, the Panama Canal. And the third is that if the U.S. is going to try to do any onshoring, they're going to need a lot of robots, and the country that's making like all the robots is China. So I think that China and the U.S. China's not going to just not do anything with a 70% tariff rate that they're sitting on, or effectively, I think the math works out with the exclusions like 47% for China. And as far as the EU goes, that's $600 billion of imports. It's $120 billion of tariffs. I don't think we're going to have like a trade war from Japan, South Korea, Vietnam. I think Canada, Mexico, we're going to figure it out. And China, of course, actually China does have cards. So the question is, if Europe, the EU has $600 billion of imports, and that's really where this is going to be a high stakes game, and the tariff is either 10% or 20. So it's, $60 billion. Does $60 billion justify taking $2 trillion out of the stock market today? I mean, that would be my first cut on why I think, even though it feels like there's a lot of bad news in front of us, at the end of the day, I actually think the U.S. is going to come out fine.
Tom Lee sheds light on the current market turbulence, driven by fears of recession, rising tariffs, and unpredictable policies. He sees potential in washed-out markets for recovery and highlights Bitcoin's role as a promising asset tied to market sentiment. The growing adoption of Bitcoin, especially through innovations like spot ETFs, marks a shift in the financial ecosystem, offering alternatives to traditional economic metrics. Will Bitcoin's adoption reshape the global financial landscape? How can investors best prepare for ongoing market uncertainties? Share your thoughts below.